They're crashing Bitcoin on purpose. Here's why. The crash that doesn't make sense. Something is very wrong with this Bitcoin crash. The headlines are screaming panic. Charts are bleeding red. Social media is full of fear. Retail investors are dumping coins in desperation. And yet, behind the scenes, something completely different is happening. Because while you're being told Bitcoin is dead, while influencers are flipping bearish overnight, while mainstream media suddenly rediscovered every negative headline they've ever written about crypto, the biggest institutions on Earth are quietly accumulating. This crash doesn't feel natural, it feels engineered. And today, I'm going to show you why this crash may not be a market accident, but a deliberate shakeout designed to transfer Bitcoin from weak hands to strong hands. This is not financial advice. This is about understanding the game being played with your emotions, your fear, and your money. Let's begin. Panic is the product. Markets don't just move on fundamentals. They move on emotion, fear, greed, hopelessness, FOMO. Every major market crash in history has followed the same psychological script. First, prices fall. Then the news turns negative. Then experts appear, telling you, this time it's different. Then retail investors panic sell. Then institutions step in and buy everything cheap. This is not conspiracy. This is documented behavior. You are not just an investor in the market. You are the liquidity for bigger players. When you sell in fear, someone else is buying in silence. And the Bitcoin crash you're watching right now fits this script perfectly. How the game is played. Big money doesn't chase green candles. Big money waits for blood in the streets. Here's how the cycle works. Step 1, create uncertainty. A few bad headlines, a government warning, a regulatory threat, a lawsuit, a big sell-off from a whale. Step 2, amplify fear. Media pushes, Bitcoin crash influencers, flip bearish charts are shown with scary red arrows, price targets suddenly drop overnight. Step 3, trigger panic selling. Retail investors dump stop losses, get hit. Liquidations cascade, leverage traders get wiped out. Step 4, quiet accumulation institutions. Buy OTC funds, increase positions. Whales scoop liquidity. On-chain data shows accumulation, then months later. Step 5, media flips bullish, new ETF hype, new adoption story, price pumps, retail, buys back higher. This cycle repeats over and over, and most people only realize it after they sold the bottom. Why Bitcoin is a threat to the system. Bitcoin is not just an asset, it is a threat. It threatens central bank control, bank monopoly on money, government control over savings, currency debasement, debt-based financial systems. Bitcoin represents financial sovereignty. And financial sovereignty is dangerous to any system built on control. So what do systems do when threatened? They don't attack directly. They undermine confidence. They create volatility. They allow fear to spread. They weaponize regulation. They allow banks and institutions to slowly enter after the public has been shaken out. This isn't about destroying Bitcoin. It's about owning it. The institutional playbook. Let's talk about what institutions actually do. They buy when retail is scared, media is negative, sentiment is extreme, volatility is high, price is below fair value. They sell when retail is euphoric, media is bullish, everyone is bragging, price is parabolic, risk is ignored. Right now, retail is scared, YouTube is full of Bitcoin is dead, Twitter is bearish. Charts look horrible. People are exhausted. This is exactly the environment institutions love. Fear is the discount. The liquidation machine. Crypto markets are uniquely designed to amplify fear because of leverage. When price falls, longs get liquidated. Forced selling hits. Price drops further. More liquidations happen. Panic accelerates. This creates artificial crashes that have nothing to do with fundamentals. It's not that Bitcoin suddenly became worthless. It's that traders using leverage got wiped out. Institutions know this. They wait for liquidation cascades. They know exactly where stop losses sit. They know where fear peaks. Then they buy the forced sales. This isn't manipulation. This is market structure. And retail always loses when emotional. Media as a weapon. Notice how media tone changes? At tops, Bitcoin is the future. New all-time highs. Everyone should own crypto. At bottoms. Bitcoin crash. Crypto is dead. Regulators are coming. Scams everywhere. The asset didn't change. The narrative did. Media doesn't inform markets. Media follows markets. But institutions position before narratives flip. You see headlines after the move. They move before the headlines. Who is buying the fear? Look at what's happening behind the scenes. Spot Bitcoin ETFs still accumulating. Custodial wallets growing. Institutional on-chain activity increasing. Long-term holders not selling. Supply on exchanges declining. The people who understand Bitcoin are not panic selling. The people who bought hype are. This is a wealth transfer event, from emotional money to patient money. Why retail always loses? Retail loses because retail buys hype. Retail sells fear. Retail trades short-term. Retail watches headlines. Retail reacts emotionally. Institutions win because institutions buy silence. Institutions sell euphoria. Institutions plan years ahead. Institutions don't need your approval. Institutions wait for panic. You are not competing with friends. You are competing with trillions of dollars of capital with infinite patience. This is how big players accumulate. They don't announce it. They don't tweet it. They don't pump the price first. They let fear do the work for them. They allow crashes, negative news, regulatory fear, liquidations, capitulation. Then, they quietly build positions while retail swears, never again. Later, when price recovers, the narrative flips to, you should have bought the dip. But at the dip, nobody felt brave. Fear was louder than logic. What history tells us, every Bitcoin cycle looks the same. 2013, 2017, 2020, 2022. Now again. Every cycle. Violent crashes. Bitcoin is dead. Headlines. Panic selling. Silent accumulation. New all-time highs. Later, nothing new is happening. What's new is how big the players are now. Bitcoin is no longer just retail and early adopters. It's funds, banks, ETFs, institutions, sovereign capital. This isn't a toy market anymore. This is financial warfare over digital scarcity. The psychological trap. The market isn't designed to take your money. It's designed to take your confidence. Once you lose confidence, you sell at the worst time. Then when price recovers, you feel regret. Then you chase later. This emotional cycle is how wealth is transferred. The crash is not the enemy. Your reaction to it is. The real question. So ask yourself, did Bitcoin suddenly stop being scarce? Did the protocol break? Did the network shut down? Did adoption reverse? Did institutions exit? Or did price simply fall? Because price is not truth. Price is emotion. What this means for you. This is not telling you to buy. This is telling you to think. When fear peaks, ask who benefits. When panic spreads, ask who is calm. When headlines scream, ask who is buying quietly. Markets don't reward emotions. They reward understanding structure. Final warning. The next phase is always the same. After maximum fear, the narrative flips, price stabilizes, volatility fades, media tone softens, retail returns. Then price explodes higher, and the same people who panic sold will say, I knew Bitcoin would recover. But knowing is not the same as acting. The crash is the transfer. This crash may not be random. It may be the mechanism. The mechanism of transferring Bitcoin from emotional hands to strategic hands. And once that transfer is complete, the narrative changes. The pump begins, and retail chases again. This is not financial advice. This is market reality. If this video helped you see the game more clearly, subscribe for more real breakdowns of how power, money, and markets actually work. Because the biggest danger in investing is not the crash. It's believing the story you're told about it. Stay aware, stay awake. This is Felix. See you next time.